All right, ladies and gentlemen, MrSotko here, and welcome to How to Do Your Taxes for Bitcoin and cryptocurrency. And as you can see, my enthusiasm is fading as the seconds go on because this is the most boring, lame topic ever. But I've been asked this by so many people to make a taxation video on cryptocurrency and what you're supposed to do. And my answer is, well, I'm not entirely sure, even after doing research. So that's not good. Nobody's really sure, and this is the reason why you'll see in just a moment. I wanted to call the IRS personally, and I did try to do that. However, their system in which you press the buttons, their little phone system they got going on, is like a little maze, and then it eventually asks, would you like to ask a general question about these taxation services, what have you, and you press 4, and then it says, we don't do that anymore, goodbye, and then you have to do the whole thing over and over again. So I spent a good while doing that, and that was a pretty good, fun phone maze. However, I decided to go online and just do it myself best I can. So first things first, I have the irs.gov site up, and you can basically get to this right here, and I will put all these links in the description of the video. But you can basically just Google IRS cryptocurrency, and they're going to give you this IRS virtual currency guide. So a bunch of this is they treat it as is not a real currency, but rather a piece of property, an intangible property. So you have to tax it like that. They also have this little button down here. If you press this, you'll get a PDF with a ton of gibberish. And now I'm not going to go over this particular gibberish. You guys are free to click on the link that I have here. You're going to go to here, and then you can go to here. And this is just a Q&A from the IRS. And of course, the IRS is completely and utterly confusing. It's half the time it's nonsense. You need a college degree in accounting just to be able to understand half of this stuff. I took economics 101, people. Okay, I got nothing. So if you go to Coinbase, if you do have a Coinbase, one good thing about Coinbase is that they have a report button. So if you go to coinbase.com/reports, you can generate your whole yearly report, probably up until this date, of all of your transactions on Coinbase/GDAX. So once you click new report, it's going to generate that report, and you'll be able to use that for taxing. So one big major problem with the IRS is they want you to track every single sale, coin-to-coin trade, purchase, everything. So they want you to track everything, which is at this point borderline impossible. They want you to track everything as a US dollar equivalent. So if you haven't been keeping exact track of every single move that you've been making, including turning Bitcoin into Litecoin or Litecoin into a different coin, basically coin-to-coin trades, any kind like that, then you pretty much have no idea what you're dealing with, and you're going to have to give the IRS just some arbitrary fake number in which you're going to pay taxes for, because there's no way to go back and remember exactly what you've traded. This is a really good article. It's a Forbes article, and I came across this and I read this, and it's pretty good. So first of all, it does say that Coinbase has a new online tax report. If you use Coinbase, you probably already know that because they had that at the top of Coinbase for about a month. But here we go with capital gains and losses. If you invested in cryptocurrencies and sold, exchanged, or spent it in 2017, you have to report a capital gain or loss on each transaction, including coin-to-coin currency sales, coin-to-coin trades, and purchase of goods or services using a coin. Deduct coin fees and other expenses appropriately. Okay? Some coins deal naturally. Some coin deals naturally, generate taxable income, including coin-to-coin currency trades, coin-to-currency trades, and mining income. For example, Bitcoin sold for US dollars is a noticeable capital gain or loss reportable on a Form 8949. Or when a coin miner receives a coin for his work, or he or she naturally recognizes business revenue based on the value of that coin. So it depends on how you're going to file. If you're the kind of person that goes to a tax professional, this shouldn't be too much of a problem for you. You're just going to have to gather all of this information. If you do this the old-fashioned way with pen and ink, and you use the old forms, then it might be a little bit difficult. However, if you've been doing it the old-fashioned way for many years, like my stepfather, like my late stepfather, then it shouldn't be much of a problem, actually, now that I think about it. If you're like me and you use TurboTax or you use some kind of online software to do your taxes, what I'm guessing is that you're going to have to gather all of your capital gains and losses and coin-to-coin trades and purchasing of goods or services using your coins. You're going to have to gather all that. You're going to have to get one big number or several numbers of all of those and then punch them into TurboTax. Because when you're going along through TurboTax, a normal person that doesn't have capital gains or losses, that isn't investing, is basically just putting in their job info. And maybe you work 3 jobs that year, maybe just 1. So you put in your job info and then you get your taxes. And usually you end up skipping half of the questions that asks you, like, do you have any investments this year? And most people just go no because they don't invest. But now that a lot of people are getting into cryptocurrency, yes, you do invest. So you want to click on those and fill those out appropriately. The next paragraph here, imputed income. The big problem for the IRS is that most other coin transactions are not evident for tax reporting, including coin-to-coin trades, hard forks, and using a coin to purchase goods and services. The coin investor should impute a sales or exchange transaction to report a capital gain or loss on coin-to-coin trades and using a coin to purchase items. Many coin investors and their accountants overlook or mishandle this report and underpay the IRS. The IRS labels coin intangible property. Coin users may call it digital money, but it's not sovereign government-issued money, which is the critical difference. Each use of money is not a taxable event. Imagine having to report capital gains or losses every time you used a cash or credit card. So that would be ridiculous. I certainly agree with that article, with that paragraph there. Every time you swiped your credit card at a grocery store, at a department store, even using it online, you're going to have to write every single little thing down, which is just, again, ridiculous. Coin currency trades. Most taxpayers comprehend that if they purchased Bitcoin in 2016 for $10,000 and sold in 2017 for $30,000, they should report a capital gain of $20,000 on their 2017 return form 8949. A coin position held for 1 year or less is considered a short-term capital gain, taxed at ordinary rates up to 39.6% for 2017 and 37% for 2018. A coin position held for more than 1 year is considered a long-term capital gain, taxed at capital gain rates up to 20% for 2017 and 2018. So it depends on how long you have held your coin. If you bought your coin and then sold it 2 weeks later, that's a short-term capital gain. And so you're going to need to file that appropriately if that's what you're going for, which could be up to 39.6%. I'm sure it depends on how much you've paid to. I'm sure there's a bracket situation. If you only made $1,000 in the year, it probably is not 39%. If you made $1 million that year, it might be 39%. Capital losses offset capital gains in full, and a net capital loss is limited to $3,000 against other types of income on an additional tax return. An excess capital loss is carried forward to the subsequent tax years, and it may not be carried back to a prior year. Some coin traders will pay massive taxes on capital gains in 2017 and get stuck with a capital loss limitation and carry over in 2018. So your capital losses, if you had to sell Bitcoin at a lower price, make sure you file that too, because that's $2,000 less in taxes you have to pay now. That's just going to negate that. Also, your capital loss is limited to $3,000 against other types of income. So say you have a job, you make $50,000 a year, and you lost $3,000 in the investment market, which I hope you're not doing. If you've watched my videos, please don't sell. Don't do it, and you won't have losses. So don't do that. But if you lost $3,000, you can essentially lose that out of your income. You can tax that away. So that's pretty cool, I guess. But if you lost $3,000, that's definitely not cool. Coin-to-coin trades. Many coin traders actively make coin-to-coin trades, like Bitcoin to Ethereum and then Ethereum to Litecoin. Currently, coin investors purchase altcoins using Bitcoin or Ethereum. Many taxpayers and preparers delay capital gains income on coin-to-coin trades by inappropriately classifying them as Section 1031, as if we know what that means, but like-kinded exchanges, where they may defer income to the replacement position's cost basis. While the IRS hasn't provided guidance on this matter, of course they haven't, and like I said, I tried to call them before this, and good luck. I dare you. I think it's now the MrSotko challenge, MrSotko YouTube challenge. Call the IRS and try and figure it out. Because I tried it twice in their maze, and then it cut me off. It's just basically like, oh, that option doesn't work. Goodbye. And I'm like, no, don't hang up on me. And then I recalled, and that option didn't work. I called a third time, actually. And finally, I was just like, I'm not going to get a hold of anybody. Let me just see if I can do this myself. And this is the extent of it, as they fail one or both of the two primary requirements in coin-to-coin trades, and both are required. First, Bitcoin may not be a like-kind property with Ethereum. Second, coin-to-coin trades executed on coin exchanges do not constitute a direct two-party exchange, and coin exchanges are likely not qualified intermediaries in a multi-party exchange. So what does that mean? That means that the IRS is basically not being entirely clear. They do want to tax coin-to-coin trades. If you come to me, you sell me something, or I say, hey, I have this much Bitcoin, I'll trade you for your Ethereum. That's a coin-to-coin trade, but an exchange is not necessarily a direct two-party exchange, because I'm just selling it to the exchange and then getting my coin in return, as somebody else did on the other side. And it could have been anybody's coin that you received. It's really just kind of going into a big pile, and you're getting yours, they're getting theirs. So that's a little strange. Not sure what to say on that, because IRS is the worst government entity to call or try to get information out of. Again, try the challenge. Coin-to-coin trading reminds me of Forex trading between different currency pairs. Various currencies are not like-kind property. US dollars are not a like-kind property with euros. Each coin has its version of a blockchain, and the network users has different purpose for each coin, which is true. So Ethereum is meant to be made, integrated with applications and software. Bitcoin is just Bitcoin, and it's a currency. And so I'm not going to go into the article anymore, because it's mostly just quotes. I did check out this cointracking.info. So this is a website that can track your reporting and tax situations for your coins. So it's a personal profit loss portfolio monitor and tax tracker for all digital coins. So they basically have historical prices for all 5,128 existing cryptocurrencies. So that's actually a pretty cool number, that there's 5,128. I'd imagine there might be a few more that just are so small that they're not even tracked, but 5,128 cryptocurrencies. So that's what the government is dealing with, and that's why they make it this very, very hard. And I will not be surprised if one day the government really, really cracks down on cryptocurrency in general and taxes it at all times, or does even worse. But that is about it. So you have a few options when it comes to paying your taxes with cryptocurrency. You either A, need to bite the bullet and just go to an accountant. They're everywhere. Everybody knows what I'm talking about. Liberty Tax, or the just that little corner tax place that every single town or city has all over the place. You got to go to one of those. Unfortunately, they do usually charge you a couple $100. But if you're making more than that in your refund, then I don't suppose it's too big of a deal. Of course, there is the old-fashioned paper way, requesting the papers and forms from the IRS, filling them out like they did in 1952, and only old people do anymore. But if that's your thing, go right ahead. There were some notable tax forms within these, and talking about where to go, tax form 8949 and stuff. And then the third way, I think, is the best way. I've been using it for years, TurboTax. And I don't mean to sound like I'm promoting that, because if I am promoting that, where's my TurboTax money? TurboTax, where's my money, TurboTax? I want my money. I'm sorry. But come on. It's a promotion. I don't know. But TurboTax, I've been using it for years, and it's just really, really easy. And now I think they're totally free. They used to charge only for federal, or maybe it was only for state. They would charge for the state refund, but now they don't charge for either, which is pretty awesome. And I'm sure at some point throughout TurboTax, there is going to be a point that you just file your investments, because the way that TurboTax goes is that you put in all your information, and then it starts to ask you for your W-2s or W-4s. I can never remember which one. I know when you, I think W-2s. So W-2s, and you'll put in your job information, whether you have one job or multiple jobs that year. It doesn't really matter. And if you're watching this, you've probably done your taxes before, so you know what I'm talking about. And then eventually, as you're going, it'll start asking you if you've had more investments, if you have different kinds of investments, and some of them will not apply to you, but eventually you're going to come across one that's going to sound right. Use your intuition with it. Do you have investment money? Do you have some kind of, do you use stock or anything like that? And cryptocurrency is probably going to fall into that category. And so that's how you would go about doing that. Also, feel free, guys, and ladies, to go through the internet, check these links that I'll be giving you. I won't give you this link because I'm going to give you this link that you can just click on there for the IRS. This is just a Q&A. We can take a look at it real quick. But it's of course from the IRS, so it's not really going to tell you anything. They never do. And it's just, how is virtual currency treated for federal tax purposes? It's treated as a property. But see, even that is vague. It's immediately, on the very first question, it's vague. So virtual currency is treated as property. Well, what do you mean property? Like land property, house property, like my car property? No, it's actually intangible property. So it's talking about as a currency, as an electronic intangible property. And so that could be confusing immediately, because are there different taxes for land property for things like that? Yes. Is virtual currency treated as currency for purposes of determining whether a transaction results in foreign currency gain or loss under U.S. federal law? No. So basically, you can transfer. Apparently, according to this, you can transfer to a different currency, and then it's okay. So again, it's just really unclear. Like all these questions, I looked at many of these questions, and eventually you're just like, this isn't helping me at all, and you kind of click off of it. But it is free for you guys there. And again, if you do use Coinbase, I know the majority of people do use Coinbase because it's just the biggest exchange at the moment. You just generate a new report under coinbase.com/reports. I'll put this in the link in the description as well. So that's about it. And also, a friend and I, we were discussing this over TeamSpeak, and both of us were trying to seek out the tax information while we were talking and chatting with each other, and neither of us came up with a really good conclusion on it, and that's a big problem. So I think my best advice is to use like TurboTax or an accountant and do the best you can. Generate that report and give the IRS the best you got. And if you get a report coming back, halfway through the year that you didn't pay all your taxes, or that they somehow found out that you paid too much or you paid too little, then you're either going to get a refund or you're going to have to pay more. That's pretty much it. That's the middle ground. If you just pay what you think you should pay and what you've calculated to the best of your knowledge, that's the best you can do. And if the IRS comes to you and says, you owe us $50 still, well, I'll pay him the $50, I suppose, or whatever you want to do. But this was MrSotko. I hope this wasn't too confusing, because it was for me too. And I put this video off for a long time because honestly, nobody knows how to do cryptocurrency taxes, and I don't even think the IRS knows what to do. They're still sort of getting their shit together, if you will, and putting things where it needs to be, and implementing new laws on cryptocurrency. So right now it's pretty much still just the Wild West, and they're just now starting to try and tax you. So do the best you can. I'll see you guys next time.